So
it's crazy. And even in the United States, we've had plenty of people that try to act like Sherry, our accounts receivable. They'll impersonate her and say, "Oh, send a wire here." And we find out where the wire is or where the bank is. And we're like, because let's say a client has to make a remitting payment of $75,000, let's say, for instance, right? And somebody intervenes and has been checking out our emails and intervenes and sends out an email to this person saying, "Hey, and they misspelled this and this and this." And they say, "Hey, so-and-so, please, here's AZ Construction's new wire info." And these people are so bold because wire fraud is like federal. You don't mess with that stuff, right?
yeah,
So these people this just happened recently, a couple of weeks ago, where these people have a bank account in California and they tried to act like Sherry, and they tried to get a doctor client of ours to pay a large sum of money. And thank God we were able to intervene and say, "No, that's not us." And we would never ask for a wire unless it's like telegraphed if you have assets managed by your bank. And so it was just the craziest. People are getting old. And
have you ever wondered how successful architecture, engineering, and construction companies scale their business?
Or have you ever wanted guidance on how to get more growth, wealth, and freedom from your AEC company?
Well, then you're in luck. Hi, I'm Will Forat.
And I'm Justin Nagel, and we're your podcast hosts.
We interview successful AEC business leaders to learn how they use people, process, and technology to scale their businesses.
So sit back and get ready to learn from the industry's best. This is Building Scale.
Hey listeners, it's Will here. Our mission is to help the AEC industry protect itself by making technology easy. If you've ever listened to our show, then you know that the 3 pillars of scaling a business are people, process, and technology. So if you suspect technology is your weak link, then book a call with us to see where we can help maximize your company's IT and cybersecurity strategy. Just go to buildingscale.net/help.
Today's guest is Jeff Wagner, founder of Arizona Construction and Renovation, a company he launched in 2016 that serves both residential and commercial clients across Arizona. Jeff's path to construction wasn't exactly traditional. He earned a degree in molecular biology before joining the construction industry along with his father. Early in his career, he developed deep experience and expertise on the financial side of the business, combining operational knowledge with sharp understanding of strategy and economics. He's also done work for Archer Daniels Midland, one of the world's largest food processing and commodities trading companies, bringing a unique perspective to business and risk management, which we're going to talk a good amount about today. Beyond traditional construction, Jeff has extensive expertise in industrial restoration projects within the international oil and gas industry, where he leveraged his knowledge of commodity and futures markets to help clients achieve their financial objectives. He brings a whole blend of fun stuff, and you're going to hear this all here. But Jeff, welcome to the show.
it's good to see you guys. How are you?
Doing well, doing very, very well. Very busy. A lot of flying around. Me and Will were just in San Diego speaking at a conference, talking about cybersecurity and all that fun. But lots and lots of fun. And we're in summer now in Arizona. It's broke 110, and this is the real deal. We're back in it.
I'm super excited for this episode. I cannot wait because this is something that I like to more than dabble in.
Yeah. Will is totally nerding out on this episode. He's talked about it more than perhaps any other episode prior to it coming out. So you're in a rare air, Jeff. I'd like to say. But before we dive into that, let's talk about just your background. How did you get into the space? And tell us about your company.
Yeah, so I don't think I can waterproof a shower like my father. There's still showers from the 1980s that are still hanging around, and he did them far better than I did. So it's been an evolution to AZ Construction and Renovation. We've been really fortunate as a company to really just keep growing the right way and bringing in the right people. And at the end of the day, that's all that matters, is just bringing on the right people. Regardless of what happens in the world, it's important to just make sure that your people like what they do and they like you. So I hope we do that. And we use a little different blend of economics and trying to protect from what's happening in the world, what we think would be risks in the future. So it's been a learning experience, and we've been fortunate enough to put all of these things together. We constantly learn every day. There's always something new to kind of fit into the business model, whether it's paying people faster than normal, right? Subcontractors are definitely inside techs, people that work for the company. At the end of the day, if people don't get paid, they're not going to do work, right? And so we're big on getting people paid, right? So as far as, I think a lot of relationships with contractors and subcontractors, they're used to, oh, you're net 30, which turns into net 60 or net 90. You know, at the end of the day, good teams, they need to pay their guys Friday, right? So what we do is, if honestly, we truncate that time frame, right? So if you get done by Wednesday, we'll try to get you some money up Friday. Plus, we'll bring money up front for materials to be purchased, right? And that's outside of, outside personnel, subcontractors that are vetted and that are licensed and insured and bonded. But inside techs, I think a good economic indicator is relative to a year ago, how many people are asking for advances. And I'm kind of worried, right? Just by that metric.
Yeah.
But yeah, so.
That's a good informal metric.
Yeah.
Yeah, it's kind of like same store sales. I look at it for some type of, like a retailer, right? But I see it in a different way. Like people weren't asking for as much advance, on their paychecks. And life happens. Some big things occur. You need a car, you need a new transmission, or whatever happens. And it's kind of, we just see this happening more and more as a business. And we like to take care of people, because at the end of the day, if people are happy at our customers' houses or the job sites, commercial job sites, even if they're happy, it kind of permeates and goes elsewhere. So.
It's weird how paying people makes them happy, Jeff. In any other industry, this is such an obvious thing, but I feel like, to your point, a net 60, a net 90, like, what are we talking about?
That's crazy. And then we have clients, some corporate clients that have even filed bankruptcy on us a week after the job was done. And guess who has to kind of fit the bill? I still have to pay my employees. We still have to pay our guys. And so then my bankruptcy attorney gets involved, and it's like, oh, geez, So I get it. It's nice that we don't live in a debtor's prison society, but it's good to pay your bills, and that's top down, right? So, yeah.
So how did it start? How did the business start? What did it look like in the beginning days in comparison to today?
Construction in general has always been in the blood, so to speak, right? And I've been fortunate enough to meet some really great people that share that, right? So so starting out, I did not study this in college. I studied molecular biology, right? And so
I mispronounced,
that's okay.
Certainly.
Cells versus other living things. It's all good. So basically it was I did mostly biotechnology, DNA sequencing, stuff like that. So it was more of I started investing in little biotechs, and I learned business that way, when I was in college, because we were buying a lot of little reagents and we were spending a lot of money on little things. And I'm like, I want to invest in the guys that make this stuff, right? So I sold my car, got a couple grand, started investing in little biotechs. I'm going to date myself, but this was early 2000s, right? When I was a freshman at the U of A. And I knew that to invest in these guys, I had to make sure they weren't a hole in the wall. And so I'd drive out to California, usually is where they are, and I'd act like I had $100 million. And I got the inside scoop on these companies. And I learned how to really read body language, because CEO and CFO are going to try to, deliver a message a certain way, right? But the people that work at these companies, they're not going to lie with their body language, right? They're going to tell you the truth with how they stand and talk to you, right? So I had a lot of losses, a lot of wins, and just learned along the way, right? So, but from then I went from, investing in these type of things to, I kept my financial teeth on LaSalle, in Chicago, working at the exchange. And it was really risk management. That was the biggest thing. And I'm like, I have to do something in construction. And so it's always, from that time, I spent a lot of time back east, working in construction and these type of, these businesses, really getting the experience to go out on my own. And I was very fortunate to meet the right people to, get things moving. So it went from there to, investing in and meeting people from outside the United States. Because I had that risk management background with mostly oil and gas as well. And so I was able to meet some people that knew people that were well connected and had large businesses that needed what I provided. Tenant improvements for oil and gas companies, floating storage regasification units for liquefied natural gas, basically, right? Which are all the rage right now because of what's happening in the Middle East, right? As far as what's happening with those, right? So I've been fortunate enough to meet a lot of really interesting people and have some really cool business outside the United States. But AZ Construction really took off when we really honed in and focused on the domestic market, right? And it's been a crazy building experience, get a couple of punches in the gut and then roll with it and keep at it. If I speak too much, just interrupt at any time. You know what I mean?
Oh, this is great.
You're all good, Jeff. Don't worry about it.
Yeah. But yeah, it started out, in the beginning, AZ Construction in the United States was really tailored to, really just saying, you got to start small. And I don't like to buy toys, I'm not big on that. So the money that, I put into the business, I was just able to size up again and again, right? From then, kind of really small projects to larger and larger, hire these guys, hire these employees. All employees are very important, but our accounts receivable is very important. Sherry, I think you'll appreciate that. We usually share an office together, but she's not here right now at the Scottsdale office. We have two different offices. So, but yeah, just meeting the right people and learning, how to deal with people. And it's not just clients making them happy. It's definitely your employees, definitely subcontractors, but more employees.
All right. So you were doing stuff internationally, and then you say, hey, we got to come back to the roots, back to the States. What did that look like? Because my guess is you weren't doing oil and gas stuff here in the state, or were you?
Yeah. So in the States, no, ironically. So my business partner outside the United States, we dealt with a company from Argentina, of all places, and they made a box that takes, there's wells around the world that just spew methane into the air, and they make the best box, capture that, liquefy it, and throw it into a grid. I know how to throw that to a grid. I know how to hedge those molecules to it. You need the offtake, you need to protect the price movement, stuff like that. I know it's totally different business model to putting up, a 2,000 square foot EDU, but at the end, a business is a business. It's all the same stuff. You have to manage your risk. You got to pay people. You have to take care. You have to provide value at the end of the day. So that's what it was. And so coming back to the United States, I concluded a few deals, and so came back to the U.S. Really went full force to the domestic market, and it's really been interesting. Yeah, COVID was really an interesting time. So right around then, our biggest concern wasn't bringing in new jobs. It was taking care of our guys and giving them work, basically, right? Because things effectively shut down. So it happened at a really good time that this business went asymptotic in that regard. It just went crazy. So it's been really interesting and really just leveraging that to just take on bigger and bigger jobs, get into, markets that we know well, just bigger opportunities.
Got it. So was that a piece of rates are down, people are putting more money into construction? If it's,
that's a great
either
point.
Doing homes or what was the thing that was making that hockey stick of growth?
So one of the things with the Housing Act that's being pushed right now to be, and it will become law eventually, right, is the private equity. When rates went to near zero, money was almost for free. A lot of really smart people with a lot of access to capital, they said, hey, at the end of the day, this is just an equation. If we can buy something and pay near 0% as far as to borrow, I'm going to go buy tons of homes, right? And that's what they did. So you saw you saw BlackRock, KKR, all these other guys, and then other publicly held companies. Zillow, for instance, they got to borrow. They were borrowing straight from the Fed almost, right, at near zero, and they were buying homes and flipping them. We were fortunate enough with our connections to do and remodel a vast majority of those homes that were purchased in the state of Arizona. Business, not only through COVID, started to increase on custom homes and commercial, but doing these homes that were purchased for Wall Street, basically, and they just make the spread, right? They make the difference. They're borrowing at this, and they rent it out for that, and that's what cap rate, and they can lock that in and then sell that and you know, or keep it in a portfolio, right?
Were these single family or multifamily? Just to be clear.
And each company had a different, they had different specifications, like no townhomes or things with shared walls, you know, stuff like that. So mostly single family homes. So when rates went to zero, the public at large was refinancing and buying homes. Great idea. But you included a new class of buyers that historically has never been there before. And this is outside of real estate investment trusts. This was straight up Wall Street money saying, hey, we're going to buy 10,000 homes here, 5,000 homes here. Atlanta, Phoenix, Nashville, a lot of different cities around the country. There was a lot of supply taken out the market that would go to normal buyers, normal people, right? And those are now in the hands of private equity, right? So this bill, we're really excited. It kind of caps private equity at 350 homes. When this passes, right? If you have 350 or more homes, you can't buy anymore, right? So that's kind of the cap. And some of these guys have thousands, tens of thousands. So it's quite a bit.
Wow. Yeah, that's massive.
So the business went up a lot, and going from buying about a couple $1,000s a day at Home Depot to $50,000 a day, that was really tough to get all those text to confirm messages at Home Depot. I'm just like, that's why I have a white beard now, because I'm like, oh my God, it was just crazy. It was just nuts. And so, yeah, it was just nuts. So, but hindsight's 2020. I wish we were able to use interest rate hedges to protect, because people were saying, oh, interest rates are going to stay low forever. There's no risk to the economy. Well, historically, that doesn't work. It's not real, right? So I wish I was able to buy the Euro-dollar futures and just for the next 5 years, because rates did go up. Now, the Euro-dollar futures is not the euro currency. It's dollars, the interest rate that dollars get outside the United States. So there's two different things. Yeah. But it's a good way to get a gauge on short-term interest rates. And you just keep rolling as the years go by, or you can go out. But anyway, I was like, oh, rates are going to probably go out. They're probably not going to go negative. The only thing that went negative was Switzerland for a little bit, right? So, but now interest rates are up. Wall Street still owns these homes, and people either have golden handcuffs to their homes that they were able to get a great rate on the mortgage at a great price. Now prices are up and rates are up, and it hinders a lot of people to either move to different places or to be a first-time home buyer. And definitely to get your, investment property as well. So it's a really interesting place we're at right now. So we'll see what occurs. We're excited about this legislation because we feel it will engender home ownership for the long term. Hopefully it gets moving.
Can you go back real quick? There's something that you said, and I want you to slow down because I think a lot of people may have missed what you actually said. Okay. What did you do with the interest rates and the futures? What are you actually doing, buying or selling or otherwise? And explain the ideology or the philosophy behind what you're doing. And then once you're done with that, the second piece is, well, doesn't that cost money? Wouldn't that kind of cut into your profits, right? So kind of answer that question after.
Great question, Will. So essentially there's correlations, right, that occur in the world. If interest rates go up fast and hard, there's probably going to be less people buying homes or doing additions or taking on less projects on the local level. But also businesses will be constrained too because the cost of borrowing goes up, right? So you can think of the cost of borrowing going up, business may slow, right? So that relationship holds true. And if rates are near zero, or if they were at one time, it would make sense to say, okay, just in case rates go back to a historical norm, well, I'm going to take a position in the futures contracts to where if rates go up, futures contracts go down, right? So I'm going to get short the euro dollar future or the 10-year or whatever it may be. I'll short a few to not be as complicated as possible. Basically, I'm going to sell something that if rates go up, I'm going to make money on the difference of what I sold. I know it's complicated, but let me try to break it down. If I sell something at $100 and I think it's going to go to 80, and I don't own that thing, and I sell it for 100, let's say I have one of those things, I sell it at 100 and I put $100 over here, right? It's sitting right here. I have the absence of that thing that I have to give back later, right? So I've got to give back that thing, right? I've sold it at 100 and it goes down to 80, let's say. I buy back that thing. I give it back. I have now kept $20, right? So essentially that's what you do in the futures markets in general. It does make sense to use options to protect yourself, right? Because Wall Street always has been and always will be the Wild West. And when you do these type of things, it depends on the market, but it's kind of like playing poker, right? And so you have your cards, and there's a lot. Now there's programs, what do they call those? Algorithms run by AI now, and they can see your cards basically. Right? So it's not, you're not playing a fair game. So if you have protection on that bet, you'll be able to withstand a huge movement to the market, if that makes sense. So you can protect yourself by buying insurance. That insurance is called an options contract. So if I sell short that futures and futures goes down, I'm going to make money on that difference. But if the futures contract keeps going up, I want to protect myself. So I would buy an options contract to do that. Right. And
so as long as there's a volatile move, you'll either make money. So if volatile move down, you'll make money. Or if it goes up, you don't lose money. Is that correct?
You will lose money, but you only lose what you spent on your insurance. It's kind of like having homeowners insurance. You don't want to have to use your policy. You don't want to have to buy out a claim at State Farm, right? Or any insurance company. If your roof blew off or you had a water leak, you'd rather not. You just keep paying your premium. Well, that premium is what you pay and to buy that protection, right? You don't want to use that protection. You don't want to use that options contract. And when we say the volatility, I'd rather it just be a nice slow move to where I think it's going to go. I'd rather it not be volatile because that means I got to spend more time protecting or doing those things, right? So yeah, I hope that kind of answers that question.
So that answers it. So you were doing this in tandem with, while you're running the business, you're essentially going, in order for the business to not be affected by what might happen in the future.
Yeah. So what I wish I would have done. So doing all those remodels basically for the large private equity firms and Zillow and stuff like that, revenue went up significantly. I mean, you go from can I talk numbers? I mean, like,
sure, you can talk whatever you want.
A solid business, right? Out to like 20 million real quick. And you're like, oh shit. Or like, oh my God, like real quick, right? And that was a function of low interest rates at that time, right? And then when interest rates started to go back up, guess what business model of mine went away? It was those clients ceased to, they were not buying homes anymore because the difference, they couldn't make the cap rate difference anymore. They're not going to borrow at 6 and rent a house out for a cap rate of 7, especially with the volatility. What if the price of homes goes down 10%? They're wiped, right? So that would not be good. So it's so for the business itself, I wish I would have hedged with interest rates going up because that segment of the business went down and we didn't fire anybody because of it. We had to diversify real quick, right? And so at that time, we focused more of our efforts into the insurance business model, right? Both for businesses and for the retail side, normal people, right? So if you file a claim to your insurance company, chances are that in the state of or Phoenix or Tucson, the large metro areas, you might be a client of ours, right? Because we work with the insurance companies and other companies to make sure that you get put back together. It's a little bit more daunting of a task because you're not dealing with people at a very happy time in their lives. You can imagine. So we also do a lot of custom work, a lot of commercial work, which is people are wanting to make huge improvements or things that they want. So, but the business model itself, we pivoted to really bring that on. And so it was a great learning experience. When you turn a project manager into an estimator, that's rather interesting. So we had to hire estimators, right? More for that insurance industry, right? And the set of tools that they use. But it's just been a great process. And now that, a business model of revenue going from that to that, it was a great learning experience. And I wish I would have hedged more. I wish I would have done other things, but all I could do is learn from the past and move on. So,
well, now that you had that experience of like, oh, I saw this thing, I didn't hedge there or couldn't hedge there. How do you look at the market now? And like, what do you do now that you can hedge your interest?
Yeah, short answer is I don't know. Short answer, I'm not that smart. But I will tell you this: the historical valuations are pretty high in terms of the S&P. Now, a lot of our bigger customers that are building beautiful homes or doing ADUs and putting in nice bathrooms, let's say, and they have a good amount of assets. They're usually tied to the S&P 500 or to a lesser extent the NASDAQ. So whatever's happening in the U.S. economy, you'll see this, if the markets are at highs, which they effectively are right now as of today, almost like 1% off, 2% off maybe. People still have that cash that they can pull from and do these renovations, these remodels. Because interest rates look scary to me. The chart itself, the 10-year, for what, if you lend money to the government, they'll pay you an interest rate for a 10-year period. That is looking scary because that could either go way up over time or it could come back down. I just don't know. It looks to me like it's going to go higher. I hope it doesn't. It's interesting. China the Chinese 10-year rate is half almost what the U.S. is. And that's because China can do other things that aren't tied to the world, that can kind of localize things. Whereas the United States, we got to play ball to a different set of rules. So basically that rate and interest rates downstream to what people borrow is indicating that the United States looks riskier than it was in 2020, 2021, 22, right? But what it's also saying is that there was a forcible movement to keep interest rates low at that time because of an economic slowdown due to COVID, right? So it's really weird what's going on. Long story short, maybe a good thing to do, and I'm not going to give financial advice, maybe a good thing to do is to take short positions at a certain place and use protection. For our business model, that does make sense. Also, kind of that middle tier, so that's kind of higher tier is just the markets in general. The government's in a really precarious position. I feel sorry for people in Washington because you got to keep assets up to keep tax receipts high. And if you don't do that, the interest rates will go back up even more because you'll be deemed more risky. So it's really kind of, it's tough. It's a tough place. I'm going to say so interest rates, middle tier, if oil stayed that high as it was about a week ago for longer periods, it's like a silent tax, that went out to oil companies mostly in different countries. They did pretty well. The United States is the biggest exporter of not very pretty crude, right? And the biggest exporter of crude, and not all oil is the same, right? So people think, oh, oil is up. Yeah, our refineries were tooled to get oil from Canada, right? Or guess what? Venezuela, which kind of made sense what occurred, right? To kind of get that other, if Canada may play nice with China, we can cozy up to Venezuela. Cozy is a very loose term, right? So So yeah, but not all oil's the same. God didn't make all those molecules the same. Some is really heavy and nasty, full of sulfur and stuff like that. Stuff out of the Middle East generally is really pretty and light, sweet, you know. But yeah,
that
anyway,
sweet oil.
the oil, if oil stays high, it hurts everybody. I mean, our input cost from fuel went up. Oh God, it was nasty, you know, because we have a bunch of vehicles. We have all this stuff. And we had to pay higher for fuel. So I'm not going to hedge that for fuel. But what I will do is I'll say if oil goes up and stays up, it'll really be not a good thing for the average person, because that's a silent. If you have to pay another $400 or $500 a month for your gas, that's going to change your spending patterns, right? That's going to really just knock you on. So it's good that it's back down now. I think, you know, oil is one of those markets that'll take your head off if you don't know what you're doing. So, yeah.
Can I ask, because we talked about this in a prior call, you were doing some hedging with the construction business.
Lumber. Yeah.
Okay. So can you tell people what it is? How did you explain what it is? Because many people do not understand the futures market, how to use it. I think I've been talking about this, and only the largest of companies have I ever talked to will actually do this or actually understand this stuff. But I think if you break it down, maybe some smaller companies can actually look into this, because I think it's worth it.
Yeah, I think it is too. I think the more information you have, the better. So contractors out there, if you want to kind of figure out this, you can call me anytime and, you know, we can talk. But, you know, at the end of the day, lumber, the average house takes about 17 to 21,000 board feet, right? Stick frame anyway. To build, you know, 2,000 square foot home, more or less, you know, with waste, all that stuff. That's a lot of lumber, right? And for a house, right? So, right around COVID, right? There was a lot of, you can get lumber from a bunch of different places and bring it to one spot and then sell it to all the guys that chop it up and put it into sticks, right? So these markets, the lumber market, for instance, is a place where people determine price for the lumber that they grow and the lumber that the buyer wants to buy for. And they're constantly beating each other up to get the best, most efficient price, right? And so lumber is a futures contract that's been traded for a long time in Chicago, right? And it's funny because all the lumber, it's a physically settled contract, which means that if I buy a futures contract of lumber and I hold it till expiration, like if I bought one right now and I held it till July 26th, I would have 27,500 board feet of lumber on a semi waiting for me in Chicago. So a lumber futures contract is the size of about a house and a half, right? And right now, you know, that price is a major component of what you buy your sticks for, what we buy our lumber for, right? And it's determined by that price, right? Well, in 2020, what occurred is there was a lot of politics between the three countries that I mentioned, China, United States, and Canada, right? And there was a lot of, it's not what they'd be talking about, but basically the price of lumber went from cents per board foot, right? That's 12 by 12 by 1, right? And it was going from that to like 15 from a contract, ripped heads up and went to like, so all these contracts, if you were building homes and you didn't protect if you didn't either leaving your contract, and this is important to think how you write contracts as a contractor. Oh, yeah, not to be redundant, but your input costs could change drastically. Like when COVID occurred, that's what happened, right? The price of lumber went up 3, 4, almost 5x, depending on when you looked at it, right? And when you have such a big component cost going up like that, there were force majeure contracts. Basically, people saying, I can't do this for you right now. Either you're going to have to pay another 23, 40, 150 grand for this house, or we're going to have to wait. And a lot of projects were just stalled, right? So, if you knew that you had to buy 10 homes worth of lumber for the next year in 2019, and you bought those futures contracts because you wanted to lock in your purchase price at that lumber, like that $4 per board foot, right? 400 pennies. Well, what would occur if you buy those futures contracts and you'd be like, I don't care. I don't care if it goes down to 3 because I already got my contract locked in. I know what my client's going to pay. But if it goes like that and price goes up, I can now protect my lumber. My lumber purchases that I have to buy have now made me 120 grand. That just so happens to be the amount that that client would have to pay the difference, or I would have to come out of pocket the difference. Right. So along that, if you constantly hedged, and that's what that is, you're buying those lumber futures to just in case the price goes up. Because I'm a taker of that. I have to buy that lumber no matter what. I have to protect its price, right?
What does
yeah?
So, real quick, what does it cost, right? For a futures contract? Because
Like,
wouldn't that
nothing nowadays? And the guys aren't screaming at the pits anymore. It's a couple bucks. I don't suggest opening out futures accounts. It's like giving a toddler a loaded weapon. You do not want to see what occurs after that. Okay, at all. You need to know what you're doing, and you need to not use real money maybe and see how it works. Because people will think, oh, I can do this, right?
Monopoly dollars.
Yeah, I'm just saying, it's a dangerous thing because what you're going up against, who's the opposite bet to that? The producer of that lumber is essentially selling you that lumber at that price, right? And there's like 3 people in lumber, right? 3 big banks that move, their hedges around, right? And it's just 3 big players meeting at a price, right? So if you step in there, and remember I said it's like playing poker with your cards out, you're going to get ripped, especially if you don't. And the futures options on lumber, they don't even exist, right? So you can't buy protection to protect your hedge. I know it sounds weird, but so you're literally at the mercy of the market going up and down, right? So let's say you were short a futures contract and it went up for 300%, you got blown out. So that's what I'm saying. Do not trade futures. Do not do options unless you really know what you're doing and you have everything mapped out in terms of risk. Right? Now what's happening with lumber, to kind of give you what occurred then, it went up really fast, really, really hard, just, and it was because of politics mostly, right? Supply, it was all there mostly. So what happens though, when commodity markets go up or down really quick, if you're a producer of lumber and your ability to sell something went up 300%, you're going to go max, right? You're going to go crazy and you're going to sell as much as you can. Well, that selling pressure moves the market right back down to the states where it should go, right? So that's what occurred. Right back down, right back down. Did some people get their heads taken off? Absolutely. But it went back down to a price that made sense. Home Depot still didn't lower the prices that much as it came down, right? So, I love Home Depot. I'm not saying anything negative about that, but retailers generally take time to adjust prices, right? So the price of lumber right now is like $6.25 per board foot. That is still twice as much as it was about 5-6 years ago. So it's still, input costs are going up. And that chart to me looks like it could go up more, right? Now, if economic slowdown occurs, you'll see the price of lumber go back down. The low of lumber was almost $2, like $1.90 back in financial crisis. That was because the market was thinking, nobody's going to build homes.
Nobody's building a house because people are defaulting.
Yeah, that's not the case. That was never the case. So usually the markets, if they give you opportunities like that, you should lock in your buying ability, especially if you're going to build a lot of stuff like us.
So essentially buying houses or lumber, because those futures contracts, typically you're not buying just a little bit. You're buying a house and a half worth of lumber for each one of those contracts.
Average house.
On average, right?
Yeah. And it's so liquid. I mean, there's barely anything that trades. So lumber to us is not an effective way to hedge anymore. It's just like I said, there's 3 players and it's all computerized now. There's no edge. There's no ability to protect. So for us, it doesn't make sense. To us, what does make sense is interest rates, crude oil to a lesser extent, and maybe the markets, maybe the overall indices.
So right now, are you hedging? Are you doing any type of hedging?
Yeah. Yeah. Like, well, I don't want to say what it is, but
Okay. So you are doing some sort of hedging, but it
yeah.
is, but
Yeah.
that's a trade secret right
Conceptually
now.
the same.
Well, no, it was no trade secret. Okay. Let me just say this. I'm worried about valuations here. And I'm worried that if markets do go down, that my business will be affected, that the business will be affected. And so I'm just worried about that in general.
Okay.
So yeah, could things continue to do really well? Hell yeah. I mean, this is the United States. The United States has proven to buck trends significantly, and I'm fortunate enough to be a citizen. Yeah. But historically, when things get here, generally things tend to reprice to the norm. We're not at the norm. So
is that usually a fast or a slow reprice?
I don't know, but historically it can go fast. And what it does is, generally speaking, the generation that was alive when that occurred, for it to reset has to be effectively out of the markets. When they talk about the 29 crash, I mean, 87 was paltry compared to that, right? But everybody in the markets in 1929 is not in the markets now, right? So, in 2009.
How old is Warren Buffett? I'm just.
Yeah, I know. He was not around. He started cutting his teeth in the 50s, right? So, or 60s. So 87 made sense. It was important. 2009 was a big deal, but I think we've had it really good for a long time. That's great. Is it getting long on the tooth? Maybe.
Okay. I hope people were listening, because this is what you were doing is very unique in the construction industry. Okay. You're essentially using.
A lot of home builders do this stuff. I just do it because I know it, and I don't have to roll around big size to affect my business in a positive way.
This is your edge. This is your edge in the industry.
I try, man.
Okay. So talked a little bit about process and a little bit about people. I want to talk about technology for a second, because you have a unique story while you were in UAE.
Yeah. Great country, by the way. Yeah.
So can you talk about what were you doing there? Set up the story. And I hope people listen, because this is a wild, wild ride. Okay.
Yeah.
And I'm not going to give it any more. Just listen.
Life's been good. And I've been, my business partner outside the United States, we've been able to really meet some good people, ministerial level people that are tied in that industry, oil and gas. So we were doing, focusing on a TI in the oil and gas sector in the Emirates, and just an amazing place, right? It's they got so many good things that are happening there. They cut red tape to make things happen. They really think about how to make things happen for the better. And I was a fortunate recipient of that, right? So we're there, and never use hotel Wi-Fi. Never, ever, ever use hotel Wi-Fi. Even if you don't have a signal, just forget about it.
Why?
Okay, so what happened is, by logging into the hotel Wi-Fi, somebody hacked into my bank account, right? And they actually wired money to another bank. This other bank was in the Emirates as well. I am not kidding. This bank was across the street, well, about 2 blocks away from where I was staying at the hotel, right? And I'm like, oh my God, first of all, somebody just took a big chunk of my bank account, sent it to this bank over here. I'm like, what's going on? So over there, business days are a little bit different because of, so we were able to go and go to the bank and say, hey, what happened? What's going on? So immediately we go down to the police station, right? And we went to the police station that is relatively less glitz and glamour. It was in a place called Knife, kind of where the working class of Dubai go. And we're like, hey, this happened. Look at this. Here's the trace, the bank gives the documents. Please help us, right? Help us find who owns this bank account so we can get this money back. And so we did. So we spent the next couple of weeks just hanging out at this police station in Dubai that is not glitz and glamour, and we were there with, It was amazing. I don't know if you ever guys saw the show Night Court, but it was like
Oh yeah.
Middle Eastern Night Court. I swear to God, it was the craziest thing, right? And all the different characters there, and like there was a gentleman from across the strait. He would try to befriend us to kind of just help us to maybe sweeten the deal for him, if we got our money back. And it's just random guy, not in the police station. He didn't work there, but the people that did work there were amazing. They helped us out significantly. One of them even, they found out who the bank account was for, right? And in the Emirates, it's like, if you live there and you do business there, the government can give you a call and say, come meet me right now. Especially if a police station calls you and says, come to the police station. They don't even have to go get you. They're not going to knock down your door. And these guys, they're like, hey, we can cease your visa. You will not like if you go to our prisons. So they called the gentleman that owned the bank account, right? You got to be here by 12 o'clock, right? It was like an hour and a half away. And the guy, so the gentleman that owned the bank account, picture this, like, Dikembe Mutombo walks into the fucking, to the police station. This tall gentleman from Nigeria, right? So I'm like, this has got to be a joke. So the guy comes in, and the officer set him down like, hey, this is your account. What happened here? And the guy basically confessed, and it was silent for a significant amount of time because he knew he was caught red-handed. And in the Emirates, if you do that, you get, it's not good. Do not break the law. Don't be a bad person. Basically, they just want you to do good things and not be nefarious. Well, in those types of situations, his bank account, his girlfriend took out the money, gave it to another person, and they just kept a percentage, and the other money was never seen again. Well, guess who still had to pay that money? That gentleman who had the bank account, right? So, for the next week or so, we were given, which is really unique, we were given time alone with this individual in a cell by ourselves to gather information, so to speak, right? And, so we were able to get that information, and he didn't have that much money to pay back, right? However, his church group for Nigeria did, and they all put their money together. And the dirham is about 3-to-1, right? So US dollar, if you take a good amount of dollars and times it by 3 in terms of paper currency, they have larger denominations, of course, but it's still over there at this time. This was almost 10 years ago. They still did a lot. Well, it's not that they still did. The transactions can occur via cash, right? So they were able to bring all this dirham currency into the police station. It's like stacks of currency, right? To effectively bring back the dollar value. And so it was like a weird Stockholm syndrome type thing to where they brought all the money back and everybody was happy. And whoever stole the money got their money, and it was sent to Kenya, to Nigeria. That was never seen again. But the good thing is we made them pay. They paid, and they were able to bring back the currency to the actual police station. These gentlemen that worked at this police station, I consider them my friends for life, because you never get your money back and stuff like this.
Yeah, that never happens. If you're in the US,
yeah. Oh, can you imagine? And I'll never forget this, but the very end was we all got in the same car with the police officer. And it was the car of the gentleman that was the pastor at his church group. And we were listening to Nigerian Christian rock rap type thing. And I was like, this is insane. Where has my life gone? But I didn't care because we got the money back. It was a great, great time. But that was that was a long time ago, but not too long, but still.
So wild story, for sure. Once that happens, you don't get your money back. Like once that transaction happens, it goes across country and it goes outside of the US, and you're never going to see it. Right. So you are one of the very, 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 it's actually the only story that I've ever heard that you actually got your money back. So
it's crazy. And even in the United States, we've had plenty of people that try to act like Sherry, our accounts receivable. They'll impersonate her and say, oh, send a wire here. And we find out where the wire is or where the bank is. And we're like, because let's say a client has to make a remaining payment of $75,000, let's say, for instance, right? And somebody intervenes and has been checking out our emails and intervenes and sends out an email to this person saying, hey, and they misspelled this and this and this. And they say, hey, so-and-so, please, here's AZ Construction's new wire info. And these people are so bold because wire fraud is like federal. You don't mess with that stuff, right?
Yeah.
So these people this just happened recently, a couple of weeks ago, where these people have a bank account in California and they tried to act like Jerry, and they tried to get a doctor client of ours to pay a large sum of money. And thank God we were able to intervene and say, no, that's not us. And we would never ask for a wire unless it's like telegraphed if you have assets managed by your bank. And so it was just the craziest. People are getting old, and I get it. People, it's not easy, but that's really bad stuff. That's really bad stuff. Wire fraud is not.
Yeah, you're like 0.01% of cyber crimes to get a positive and again, very peculiar, let's use maybe that word, of the whole situation, the bank down the block, days with the cops, all the whole situation. But like, it is so unbelievably rare. So
it's just crazy.
Good on you. You must also have a horseshoe hiding somewhere. So
I'd like to think so, but yeah. But at the end of the day, getting back to the very beginning, we're only as good as the people that work with us. We're only as good as, and if we have happy employees or people that like to show up, that's gonna, go to the client. The client's gonna feel that, right? And they're gonna tell their friends or their family or, or whatever it may be. And, I'm excited to see the future. So.
Justin, I think it's that time. I think, you know what? This has been a fun ride. Learning lessons. There's lots of learning lessons here. So really curious about this question. You want to take us away?
Yeah, for sure. Jeff, if you could go back 20 years, so this would be 2006, what advice would you give yourself? And now, I know that, lots of trades have happened in this time and markets have done things. So not that. You don't get to buy Bitcoin in 06. What would you do?
Because it didn't exist. I was going to say 09 would be perfect.
Google. Yeah. I don't know. Whatever it is, right? So what would you give advice to yourself? 2006?
Yeah, maybe other things have been great. I wouldn't change a thing because I wouldn't be here with what has happened. It's been a wild ride. I just spend more time with my parents because the older I get, the more I want to spend time with them, funny enough. Mm-hmm. So it's very simple for me.
That's awesome. Yeah. Spend more time with your parents.
Every
mom and dad will appreciate hearing that as the answer.
Tell my mom.
Awesome. This has been a ton of fun. If somebody wanted to get a hold of you, what's the best way for them to do that?
Yeah. So our contact information, I think, is down below. Our website's azconstruct.com. That's azconstruct.com. My information can be found there if you want to give me a call. Yeah, it's all there.
Awesome. And then is there anything else you'd like to tell the people before we say our goodbyes?
Yeah, time is short. Do things you want. Probably use things and love people, right? I think that's important. That's what I'm finding out. So, there's things you can't take with. You're not going to take it with you. So,
no.
Yeah.
Oh, awesome.
Love it.
Listeners, I hope you had as good of a time as we did. And until next time, adios.
Adios.
See you guys.
Thanks for listening to Building Scale. To help us reach even more people, please share this episode with a friend, a colleague, or on social media.
Remember, the 3 pillars of scaling a business are people, process, and technology.
And our mission is to help the AEC industry protect itself by making technology easy.
So if you think your company's technology pillar could use some improvement, book a call with us to see how we can help maximize your IT and cybersecurity strategy. Just go to buildingscale.net/help.
And until next time,
keep building scale.